Under 30, choosing health insurance for the first time, there's a lot to figure out. HMOs, PPOs, HSAs, copays. And if you actually need care, how do you even know it's covered? Well, don't worry, because Kaiser Permanente's got you covered. With straightforward answers about health plan options, information on choosing a doctor, understanding deductibles, and more. It can be a lot, but Kaiser Permanente has answers. Check out switchtokp.org/betterhealth to get it all figured out. That's switchtokp.org/betterhealth.
And good evening. We're doing it live right here, Mottek On Money, 790 KABC in the 5 o'clock hour. We get right down to business here, a news-driven hour in the heart of drive time. Mottek On Money 5 nights a week for you, live on the air here in 790 KABC, online streaming live at KBC.com, and your on-demand podcast at KBC.com, Apple, iTunes, and all your favorite podcast platforms. Happy holidays, Merry Christmas, and Happy New Year. As 2023 winds down, we see stocks did finish mostly higher today, with the three major averages scoring their 8th consecutive positive week. The Dow coming in for a closing loss today of 18 points. Santa Claus taking a bit of a breather here at 37,386 at the close. The S&P 500 managed a closing gain of 8 points, and the Nasdaq moved up 29 points. The yield in the 10-year note, which impacts the fixed-rate mortgage rates, now at 3.90%. We see mortgage rates moving lower again this week, down for the second month in a row. That was a welcome development in the world of real estate. And we'll be talking about that later this hour with Jeff Lazerson, the president of MortgageGrader.com and Orange County Register real estate columnist. We did get a new reading in inflation today. Let's take a look at that. This is supposedly the Fed's favorite gauge of inflation. The consumer index of the U.S. inflation rate based on the Fed's Reserve Preferred Personal Consumption Expenditure Index, the PCE, that's it, falling in the month of November for the first time since 2020, and indicated that price pressures continue to ease. The PCE index, the Fed's favorite inflation gauge, dipping 0.1% last month, lower at least. The inflation number was unchanged for the month of October. The increase in inflation over the past year slowed again to 2.6% from 2.9% the previous month, marking the lowest level since February of 2021. So the market cheered that. Also, consumer confidence, the last reading of 2023 at a 5-month high. That also came in better than expected, according to the University of Michigan's latest consumer confidence survey. This, of course, as gas prices have come down lately. And no surprise, as gas prices come down, consumer confidence goes up. Doesn't hurt either when the stock market is at record highs as well. Taking a look at another reading, we did get a reading on new home sales, which came in disappointing. In fact, that is something we'll talk to Jeff Lazerson about, as well as the mortgage rates. We're seeing the shares of the home builders, including D.R. Horton, Lennar, Pulte Group, Toll Brothers, moving higher for the most part. The price of oil ending slightly lower today, but did see a gain for the week as concerns remain over what's happening in the Middle East and now disruptions to shipments in the Red Sea. The price of crude oil losing 33 cents today to end the week at $73.56 a barrel. Several shipping companies have now suspended shipments through the Red Sea after a series of drone and missile attacks by Iranian-backed Houthi rebels since the start of the Israel-Hamas war. Speaking of that, of course, we're following developments there very, very closely, and stay tuned for updates. We're watching what's happening as well in Los Angeles, and very, very big news in Los Angeles. Coming up later this hour, I'll be joined by the Reverend Andy Bales, longtime president and CEO of the Union Rescue Mission on LA Skid Row in downtown Los Angeles. He's leaving that position this week after 20 years of service to the City of Angels. He himself is an angel in the City of Angels. He shared meals with families on his final day. He'll be joining us live later this hour with his final thoughts about what's happening here with the homeless situation in Los Angeles. But first, on your money, the markets, and the economy, and the whole works as 2023 winds down. And we begin 2024. Joining us live now, Gabriel Wisdom, money manager, managing director, and co-founder of American Money Management, based here in Southern California, and author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for taking the call here as 2023 winds down. Santa Claus arrived early this year. Gabriel, give us your view of this impressive rally here that's closing out 2023.
Well, Frank, we're in the final stretch of what is typically the start of the major Santa Claus rally, the period from the last 5 days of the year, which begins next Tuesday, into the first 2 days of the following year. So it should get better. especially given the fact that some $240 billion was pulled from the stock market this last year in 2023. Investors were nervous, and this may have something to do with all the predictions that didn't come to pass. As Mark Twain so famously said, I've seen a heap of trouble in my life, and most of it never came to pass. Well, that was true with the stock market. The predictions were not so good. We expected a recession. That's what we were told. Analysts didn't see interest rates this high or inflation remaining elevated, and stock market forecasts were muted. The average annual return has been about 10% for the S&P 500, and here we are above 24, 25%. Bottom line, nobody knows the future, but in the long run, good times and bad, the odds always favor economic expansion and innovation. And so you have to wonder, why was everybody so wrong, really?
Right. It was a rough year for economists. I believe Dr. Muhammad Al-Arian noted that in his latest column this week, and they blew it, right? We were expecting a recession throughout this year, and no recession officially arrived. Of course, a lot of people feel that's not a recession, that is a depression, based on their dwindling resources, and of course a lot of nervousness for some people in various industries. It was a rough year for everyone in the entertainment industry here, certainly in Hollywood, which was shut down because of the strikes and all that. But as we head into 2024 now, what is your expectation? There's still a recession talk. What do you think is going to happen here in 2024?
Well, I think the reason why so many analysts got it wrong, Frank, is there's really no recent past to compare. We came out of the pandemic era. The Federal Reserve's anti-inflation measures were so dramatic, the supply of money in circulation actually fell for the first time in 70 years. And this pandemic aid, which all the cash that was printed from the government, it was unprecedented. It helped stoke inflation, we know that, but it may have also altered the old expansions followed by economic contraction cycle or recession. In other words, the pandemic cash helped mitigate a recession, and in fact, earnings for the broad stock market have been going up, while the average stock is flat to down. Price earnings multiples, if you take out the magnificent 7 stocks, those companies that everybody's been paying attention to, Apple, Amazon, Alphabet, Meta, Microsoft, NVIDIA, and Tesla, take those out of the Standard & Poor's 500, and the price earnings multiple for the S&P 500 is flat while earnings have gone up. That should be very bullish for 2024.
And it should be noted, and you did notice the S&P 500 is up, 24%, about 24% this year, year-to-date. The Dow up about 13% year-to-date. And the NASDAQ, the star performer with all those tech names you mentioned, including the Magnificent Seven, up 43% for the year. Mercifully, we did see that turnaround recently. Signals from the Federal Reserve that they're done raising rates and may start bringing them down. What is your timetable for how the rates are going to unfold, and what kind of market reaction might we see in the new year?
Well, Frank, you mentioned the PCE, the inflation index that the Federal Open Market Committee members are really focused on, and it's showing declining inflation. So chances are quite good that they'll ease a bit. I don't think interest rates will come down as much as some are hoping, only because they were so abnormally low for so long. But assuming we make the transition next year from interest rate hikes to interest rate cuts, if history is any guide, and 6 of these rate hike cycles since 1984, in almost every case, the broad stock market increased quite nicely, about 15% during the 12-month period following the last hike in each cycle. The exception was, of course, the tech wreck of May 2000, when the market was down about 12%. But this is unprecedented. None of those past cycles involved a global pandemic. Plus, we're going into an election year.
All right, the other big news, the turnaround in cryptos following that crypto ice age or winter we saw over the past year. We saw a rebound for Bitcoin and the other coins this year on expectations that that a spot Bitcoin ETF will be approved. And according to what I last saw on one of the crypto websites, Cointelegraph, for example, they say that approval is still happening by January 10th, according to analysts they've been talking to. What impact do you think a spot Bitcoin ETF, if that is the case, once that kicks in, what will happen to the cryptos and the markets?
Well, I think it's a net positive, certainly for crypto, and the blockchain thing is very, very real. For example, Visa, the payment system that everybody knows and mostly uses, they have a giant blockchain platform that helps farmers and other small enterprises get better access to the global capital markets and convert between currencies using crypto. So it's a real application on a worldwide scale. Coinbase is the largest crypto exchange in the U.S. That stock is up some 375% this year. But they are at war with the Securities and Exchange Commission. Jamie Dimon, the CEO of J.P. Morgan Chase, told lawmakers this month that if I was the government, I'd close crypto down. And a lot of lawmakers feel that way. But on the positive front, for crypto anyway, Coinbase and the other crypto backers announced this month that they have 3 super PACs that have raised $78 million backing candidates in 2024 who favor crypto-friendly policies. So they're making headway there.
Very interesting. When the head of the biggest bank in the country makes a comment like that, people pay attention, of course. If anything, crypto impacts transaction fees and potentially would hit the bottom line at the major banks if it catches on even more than it already is. But have you warmed up to crypto based on what we've seen in recent years and how it performed this year?
You know, the problem I have with crypto is I don't see it as a currency per se because of the volatility. It's not stable. I know it's been a positive year. I recognize that it's a real asset that's tradable, but the industry faces lots of risks. The big worry, and legitimately so, would be that U.S. regulators could make it harder for digital asset firms to exist. There have been a lot of bankruptcies in the space. Another big risk is that the industry itself takes big risks, and they could take things too far. We saw that in the run-up in 2022. And then the crypto winter, the nuclear winter kind of thing for crypto. So, as an investment asset, I'd rather have companies that pay cash dividends in U.S. dollars.
All right. We should note that Bitcoin has about a 160% advance this year, adding some $530 billion to its market cap at last check. So we certainly keep an eye on what's happening there. And from blockchain, we go to gold chain now. The price of gold recently hitting a record high, just as those inflation readings were starting to ease, which is quite curious. And right now, gold above 2,000 here at 2,064.50 at last check. It moved up 13% over the past year after hitting a high of $2,152.30 an ounce in the last couple of weeks. What's your view on gold here?
Well, it's interesting, Frank. Crypto, or Bitcoin anyway, has been around 15 years, 15. Gold has been around 5,000 years. So it has a great deal of credibility with governments and central banks, especially in times of geopolitical uncertainty. 41% of the world's population is going to go to the polls in 2024 to vote, and gold has risen some 600% since the turn of the millennium, 23 years ago now. But adjusted for inflation, it hit a high of $850 in January of 1980. That would be equivalent to more than $3,000 in today's dollars. Here it is just above $2,000. I really feel that it's undervalued.
All right. What about silver?
Same thing. Silver with industrial applications. And if you assume we're going to see an industrial pickup next year, and certainly companies they're increasing what we call CapEx. They're buying more plants and equipment. They're automating, and in fact, this automation trend, which does benefit metals and particularly silver, has a lot to do with the labor shortage cycle. If you exclude Africa and
Susie Schuster and Amy Trask present offbeat conversations and expert sports commentary as they ask, what the football?
Carson Wentz got signed by the Rams.
I sat in those league owners meetings for almost 30 years, and the trade deadline was a hot topic. Push the trade deadline back so that teams that are in contention still have an opportunity to sign people. And there were other owners who said, no, we don't want players rented and we don't want fire sales. They had to make an addition, and they chose what they thought was best. I'm just not wowed by him.
What the Football? The podcast is available Tuesdays, wherever you listen.
Open up the Giant app, Flex Rewards. Earn points online or in store. Save on meals and save on sides. Save even more with bonus buys. Oh, 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 it's the place to go. Oh, 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 it's the place to go. Savings, savings, all for you. On all your favorite holiday foods.
Giant is the place to go for saving big this holiday season.
India, there's some 78 million jobs open. There's a worker shortage that benefits tech. If history is any guide, we saw a shortage of labor in the late 50s through the 1960s. There was a shortage of labor in the early 1990s through 1999. Another one began maybe 3-4 years ago. Now technology is 22% of the companies in the Standard & Poor's 500. I think this is because of the labor shortage, and this sort of technology advancement benefits silver because it's a critical metal.
All right, and we watched the price of oil spike and then pull back. What about oil here as we head into the new year?
I still like oil, and I know Elon Musk has said that lithium is the new oil, and that's because lithium is a critical component in electric vehicle batteries, and I understand that the government aims to have some 50% of all new vehicle sales be electric by the end of this decade, by 2030, and then you've got that $7,500 tax credit for buying an electric vehicle, and that's all great, but the oil producers are not really. They're not producing more oil. In fact, ExxonMobil is going into the lithium extraction business probably by 2024. They announced just last month that they're emphasizing lithium as one of their businesses, and so there's just a shortage of oil and gas, and I think that's going to be a chronic situation. I want to own the gas producers.
All right, we did see that bump in consumer confidence. That's usually a positive sign here. This as gas prices have come down. What about Santa's helpers this holiday season? The retailers, will it be a record-shattering season this year? And what do you see ahead in the retail space?
You know, I do think it'll be a record season, Frank. Consumers clearly have purchasing power. Some consumers might be weighed down by too much consumer debt, but here comes the Federal Reserve, likely to reduce the cost of money a couple of times, maybe 3 times next year. Also, households in the U.S. are quite liquid, and some 86 million households who own their own homes, well, 40% of them, based on the data I saw, 40% of homeowners have no mortgages. So clearly there's extra capital, and then with higher interest rates, savers get more return on their savings, and that money is usually spent. So it's good for retailers.
All right. Any other specific places here, Gabriel Wisdom, where you are putting money now and or taking it off the table as we head into 2024?
You know, Frank, I'm looking at the worst performing stocks in the Dow 30, the Dow underdogs, as Dow Theory's Chuck Carlson called it. If you look at the worst performing stock last year in the Dow Jones averages, Intel, it's up 78% this year. The 3 worst performing stocks in the Dow 30 last year, Intel, Salesforce.com, and Disney, in the aggregate, they're up almost 62%. And so it goes. So what's the worst performing stock in the Dow 30 this year? It's Walgreens. Walgreens Boots Alliance, WBA, down some 30%, followed by Chevron, down 16%. 3M is down 12%. Coca-Cola's down. Procter & Gamble down. Merck, Honeywell, Verizon, and United Health. I think if you own a basket of the worst performing Dow stocks for 2024, especially with the normalization of interest rates, I think you do fine.
Fantastic, Gabriel. Well, thank you very much for taking the call here tonight as we wrap up 2023 and head into the new year. We wish you and everyone there a happy holiday season, Merry Christmas, and a happy, healthy, and prosperous 2024. It's always great to have you with us, and I say let's do more in 24.
That's right. Merry Christmas, Frank. Thank you.
Thank you very much. Gabriel Wisdom live with us here tonight. Like you and me, have our ear to the ground on all things business. We like to be informed and indeed well prepared. And as important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well. And even still, we can get caught off guard as people are so focused on their destination that they might not have a plan in case they're in an accident that's not their fault. That's why I encourage you to put my friend, Attorney Clark Fielding's number in your phone. That number is 833-88-SHARK. So if you're hurt in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents, you name it. The number to call, 833-88-SHARK. That's 833-88-SHARK. Or go to clarkthesharklaw.com. Mottek On Money continues here in 790 KBC. Happy holidays, Merry Christmas, Happy New Year. Well, we did get Santa Claus early this season on Wall Street. The Dow pulling back 18 today at 37,386, pulling back from a record high. The S&P 500 up 8 at 4,755. The NASDAQ up 29 at 14,993. The yield in the 10-year note, which impacts the fixed-rate mortgage rates, is back down to 3.90%. And we'll talk mortgage rates shortly with Jeff Lazerson, the president of MortgageGrader.com and Orange County Register real estate columnist. Looks like the Dow up about 13% for the year, the S&P 500 up 24% for the year, and the NASDAQ up about 43% for the year. The price of gold has moved up about 13% this year, hovering at around $2,064.50, got to a record high of $2,152.30 an ounce just in the last couple of weeks. Silver down 11 cents at $24.47. Silver up 1% for the year, pretty much right where it started the year. Bitcoin has rallied up about $200 now at $43,919. Ethereum up 9 at $2,323. And Doge at 9 cents. Mottek On Money continues here in 790 KBC. After hitting a 23-year high recently, mortgage rates have pulled back over the past couple of months. With availability and affordability, big issues here in Southern California. Mortgage rates have pulled back again this week. In fact, they've dropped to the lowest seen since June. Let's bring in the expert on all this now, Jeff Lazerson, the president of MortgageGrader.com, also Orange County Register real estate columnist. Jeff, thank you very much for taking the call, and happy holidays to you, sir.
Thanks, Frank. Happy holidays to you. The 30-year fixed from Freddie Mac, 6.67% this week, and you're exactly right. It was June 22nd that it hit 6.67% was the last time. So it was 6 months ago, and we were touching rates close to 8% between then. So it's a welcome sign, and I will give people a really good Christmas present right now. If anybody has a rate over 6 7/8%, you can do a no-cost loan right now, and I mean no cost. Pay nothing and get that rate knocked down. And I would say don't wait either, because I think rates are going to be a whipsaw, Frank. I don't see them continuing to trend down. I think that the situation in the Middle East and the Suez Canal and the Red Sea, there's oil prices are going to spike, and the supply chain's going to get hurt. And I do see rates going up a little bit and then tumbling hard later on next year. So now is an opportunity for people to lock in a lower rate if they're 7% or so.
Where do you see the rates go from here?
So I would say short term they're going to be in the same range, spike a little bit, and then come back down. So the 30-year fix today is 5.
Former Navy SEAL Mike Ritland keeps it real on the Mike Drop podcast.
Ladies and gentlemen, welcome to the stage, Rudy Reyes.
The ethics of martial arts is why I joined the Marine Corps. I never thought I was going to join the military because I'd been around so much gun violence, and I wanted to be the antithesis of that. I loved fighting hand to hand. It's fair. You don't have to kill your opponent. You can beat them with ability and skill.
Mic Drop, raw, unfiltered, intellectually sound, wherever you listen.
Should we make plans for our anniversary?
Let's just pick something up from BJ's Wholesale Club.
From BJ's? How romantic.
Well, I was thinking...
bulk size mozzarella sticks?
No, a vacation package to the Caribbean.
Whoa! Can we afford that?
BJ's Travel offers even better value than those discount travel websites. Plus a 110% best price guarantee. So yeah, we can.
Visit travel.bjs.com to book cruises, vacation packages, car rentals, hotels, and more. Terms and conditions apply. See site for details.
0.99% at one point. The 15-year fix is at 5.5% at one point, and that's up to 766,550 loan amount in all the Southern California counties. In LA and Orange County, the high balance goes up to $1,149,825,000. Today, that's at 6 3/8% at one point on the 30-year. The 15 years at 6 1/8%, and then the jumbo, anything over the $1,149,825 in LA and Orange County, and anything over 766,550 in the Inland Empire, that's all the way down to 6 3/8% at one point. So, trending down nicely right now, but I don't see it standing. I think we're going to see some spikes, and then it's going to come down again later in the year. And so, Merry Christmas for now, but hold your breath. I don't see this holding.
All right, so for now, Santa Claus has arrived at the real estate offices with these lower rates, but it looks like we got that new home sales number plunging 12.2%, by the way, in November. This as the rates had started to come down in the month of November here, so we're watching that number. What about the impact of the lower rates that you just gave us here, Jeff, on home sales, and how are home prices looking here now?
Well, so the home prices, Frank, are just going crazy. We're almost to the highest highs that we had back in the spring of 2022. Our median price record in Southern California was $750,000, so that was spring 22. And last month, according to CoreLogic, it was $740,000 in Southern California. So we're only $10,000 off of the median high that we've ever had in Southern California. And I would expect the December data or the January data is going to come out and show that the median is going to break that record too. So we have a situation that this perpetual problem with little inventory. According to Redfin, we have 42,000 average listings in Southern California in 2023. The previous 11 years, we averaged 65,000 listings in Southern Cal. So listings are tight. There's not a lot available, and the prices just keep pushing up. Interestingly enough, though, Frank, on the new home scene, I work with some builders, and I'm telling you, Frank, they're throwing everything in the kitchen sink at these deals to keep them together. They don't want to touch the price, so they're giving people all kinds of money for rate buy downs and the home improvement kind of thing. So the builder is not a bad place to be looking right now. They're really giving some great incentives, and there's more inventory. The downside of the builders is a lot of them have those really high property taxes. That Melrose tax at 1.5% or 2%, and the normal area you would have a tax rate of 1.25%. A lot of them have high association fees, and of course, the worst of all is the homeowners insurance. Homeowners insurance is just out of sight everywhere. So I would say the bargain place to be looking right now is the builders, and just squeeze them if you're going to go buy something new, because I think you can ask for just about anything, and Santa Claus is going to deliver.
If you don't ask, you don't get, right? So that's a very,
right.
very good point. And let me ask you this. You're a straight shooter, and you tell it like it is, whether rates are going up or down, and you give your honest assessment. And you described yourself as the Maytag repairman earlier this year. That is sitting around waiting for business. Has your business picked up now that rates have come down here in the last couple of months?
Not really, Frank. I mean, the phone calls have picked up, and people. I am getting more applications in, but for the most part, they're difficult deals with marginal borrowers. But nevertheless, calls have picked up. Frank, this has been the worst year in my entire career, and I've been doing this 37 years. It is unbelievable how bad it is this year compared to last year, and then of course compared to the COVID years. It's scary, and it's not just the mortgage people. It's anybody that works in the real estate trade. I do think next year is going to be substantially better. I think more people are going to sell their homes, not because they want to, because they're out of savings, and the unemployment may spike, and people can't afford it, and they just may need to move out of Dodge. And so I think there's more sales, and there's going to be a lot more cash out refis next year. That's what my expectation is a lot of people are going to just forego that low interest rate just to be able to pull some money out and survive till things get better. So even though it's been a horrible year, I not for good reason, for bad reason, it's going to be better next year.
Wow. This year you said the worst ever, even worse than during the Great Recession days and the mortgage meltdown days?
Frank, this is the mortgage meltdown days was like a party and a parade compared to what we saw this year, and even in the last 18 months. I mean, the mortgage meltdown was maybe a rough 6 to 12 months, and so far with this one, it's about 18 months, and nothing's happening. At least during the mortgage meltdown, we still had plenty of refis as rates were dropping. Here, nobody's doing their refis, or at least not the rate and term refis, because everyone, most of the country, 63% of the country has a rate under 4%, and 40% of the people in the country don't even have a mortgage. So there's not a lot of incentive to knock the rate down. And when rates were rising this year, it's like, who the heck wants to buy anything? It just stifles affordability. It was a bad year.
Jeff, we appreciate you telling it like it is here, and we wish you all the best in the new year. Thank you again very much for joining us. Looking forward to many more conversations in 2024. We'll be doing more in 24. That's my new slogan here. Jeff Lazerson, president of MortgageGrader.com, also Orange County Registered columnist. Jeff, all the best to you and your family this holiday season, and a happy, healthy, and prosperous new year.
Thanks, Frank. You're terrific. Appreciate you.
Thank you very much, Jeff. Mottek On Money continues here on 790 KABC. I'm honored to be joined live at the moment by the Reverend Andy Bales, the longtime president and CEO of the Union Rescue Mission on LA's Skid Row in downtown Los Angeles, who's leaving that position this week after 20 years of service to the City of Angels. Reverend Andy Bales, thank you very much for coming to the line here, and we salute you and honor you and your service. You really are an angel in the City of Angels. I want you to know how greatly you're loved and appreciated here in Los Angeles.
Wow, thank you, Frank. We've always so appreciated you and all you've done for us.
Wish we could do more. And on that point, what else can be done here, Reverend Andy Bales? Your final thoughts here as you move back home to Iowa, right, with your family, and give us your thoughts about the homeless situation here in Los Angeles at the moment.
Well, as I shared once again to the City Council last week, as I was honored with an award for speaking the truth and speaking the truth to power, and as the chairperson of the City Council said, merely speaking the truth. I took one more moment to speak the truth again. Homelessness is getting worse. We'll never get there the way that we're going. We need immediate right to shelter for everybody who wants to come in. There's an article not long ago about people trying to get in a shelter and not being able to get in a shelter as these storms came our way. And we need to move to immediate triage shelter, 24/7 welcome, and away from this subpar, dirty, crime-filled, drug-addicted housing that a man in the LA Times the other day, and finally the LA Times is starting to get it, a man was quoted as saying, "I never felt subhuman until I lived here in this very expensive, slow to develop housing." Those last words are mine, but his words just crushed me. I never felt subhuman until I live here. And people don't deserve to feel subhuman, so we need immediate triage. We need a focus on recovery from addiction, mental health services, case management, which we aren't doing in all of the housing or even the inside safe. And then we need innovative, immediate, affordable, creative housing, and hopefully with recovery services in recovery for those who want to recover from addiction, because it plays a huge role, whether it started before they lost their home or they started after they became homeless and living in a hell-like environment. We need to help people with their addiction if they're ever going to escape homelessness. And I said, here's what Union Rescue Mission does: recovery, followed by career and job training, followed by a job, followed by a home and a connection to a community. That's what needs to return, because the current plan, billions of dollars of taxpayer money on housing that doesn't work, is unsustainable. There's not enough money in the world to put everybody in housing. And then when they do, the housing is subpar and a problem.
What do you see as your greatest accomplishment here in 20 years at the Union Rescue Mission? I recall you opened Hope Gardens during your tenure to help homeless mothers with children. I remember speaking about that with your former chairman, David Dow, over the years. That certainly was a big accomplishment. What would you consider your biggest accomplishment here?
Well, that certainly was a big one, and it came early. And then the ability to open up with a lot of help, Angela's House in South L.A., family bridge housing, interim housing for many families. So currently right now we have 950 family members and over almost 600 kids under our collective 3 roofs. But I'd say the attitude at the mission, which my board of directors confirmed, that we would never turn away a woman or a family with children from our doors. We really don't turn away men. If we run out of space, we refer them. But we made a commitment to never turn away a family or a woman, and we've held to that, even if we have to rent hotel rooms. So the welcoming attitude and the urgency, and I'm believing that will stay with Union Rescue Mission, and maybe I helped change the attitude of Angelinos toward not leaving one precious human being on the streets. Maybe we'll get there someday, and maybe I had some influence on that, because people are beginning to talk common sense, except for our city, which decided not to do the care courts last week, to leave gravely. They decided to leave gravely disabled people out on our sidewalks, and that was a huge disappointment.
What about that judge's ruling on homelessness? Where do things stand with all of that, and how that whole thing has played out?
Our Judge Carter, is relentless, and he's shaping up the VA, and I hope he's made progress with it. I know he's made progress with the city, and I know he's made progress with the county, and he won't tolerate much more nonsense. Our current plan, unfortunately, helps a few into subpar housing and leaves tens of thousands to suffer and die on the streets. And until we start seeing that 6 people per day dying of complications of homelessness begin to drop, we know that's the barometer of our collective failure.
Reverend Bales, thank you very much for joining us live here with your final thoughts. We wish you and your family and the entire family at the Union Rescue Mission all the very best this holiday season. Merry Christmas to you. A happy, healthy, and prosperous 2024. We will keep an open line to you and hope to have your voice back on the air here in Southern California. The amazing stories from Skid Row. We want to hear more inspiration from you. And again, thank you very much for your service. You are indeed an angel in the City of Angels. The Reverend Andy Bales, longtime head of the Union Rescue Mission on Skid Row in downtown Los Angeles. Live with us here tonight on Mottek On Money on 790 KABC.
Stacking Benjamins with Joe and his good friend OG not only has great financial insight, it's laid back with humor too.
Joe talks with Stacking Deeds co-host Crystal Hammond.
I've always been a fan of nosy neighbors. I want nosy neighbors. They can tell you what's going on 10 times faster than you would know.
Again, what's she talking about, Doug?
Really?
We're repairing neighborhoods, but then we're into nosy neighbors, and I built a career off of that.
Find out more by searching the Stacking Benjamins podcast, wherever you listen.